Most people think investing in stocks is complicated, risky, and only for people who already understand finance. But the truth is, stock market investing only feels complex because nobody teaches it in a simple, human way. At its core, investing is just a series of decisions about time, behavior, and emotional control. And the biggest mistake beginners make is thinking they need to be experts before they start. We've all heard stories about people who paid off their house, bought their dream car, or retired early because they invested at the right time. But what most people don't realize is that those results didn't come from luck. They came from clarity, from knowing what they wanted, how long they were willing to wait, and how much risk they could emotionally tolerate without panicking. The first real step in investing is not choosing a stock, it's choosing a direction. You need to understand why you're investing in the first place. Are you trying to build long-term wealth, save for a down payment, create financial independence, or simply make your money grow instead of sitting idle? Without a clear purpose, every market movement will feel confusing, and every loss will feel personal. Once you understand your goal, you begin to understand your behavior. Some people want fast results and can emotionally handle volatility. Others prefer slow growth and psychological peace. Neither is right or wrong. The problem is when people pretend to be one type while acting like another. When a conservative person invests aggressively, they panic. When a risk-tolerant person plays too safe, they get frustrated and bored. Your investor profile is basically your relationship with uncertainty. Conservative investors prioritize protection. Aggressive investors prioritize growth. Moderate investors try to balance both. But even the safest strategy carries risk. There is no version of investing without uncertainty. The only difference is how much emotional discomfort you are willing to accept in exchange for potential returns. Then comes the most overlooked step, budgeting. Most people try to invest with leftover money instead of intentional money. They invest whatever is left after spending, instead of designing their spending around investing. This creates inconsistency. One month they invest, the next month they don't, and slowly motivation fades. Real investors treat investing like a fixed expense, not an option, not a luxury, a priority. Before buying anything, you need a place to invest. That usually means opening an account with an online brokerage. These platforms allow you to buy and sell stocks directly, often with low or zero commissions. But the platform itself doesn't make you successful. Your discipline does. Choosing a broker is mostly about simplicity and transparency. You want something easy to use, with clear fees, no hidden traps, and tools that grow with you. Beginners need intuitive platforms. Experienced investors need advanced features, but everyone needs clarity. Fees are silent killers. Small commissions feel irrelevant in the short term, but over decades they compound into massive losses. Every dollar paid in unnecessary fees is a dollar that doesn't get to grow. The market doesn't punish you first, your own costs do. Once your account is ready, the real challenge begins, not doing anything stupid. This is where most beginners fail. They feel pressure to act, to buy something, to not miss out. They follow trends, headlines, influencers, and hype. They confuse activity with progress. They think investing means constantly trading, but the opposite is true. The best investors are boring. They research, they analyze, they compare, they wait, they build positions slowly. They diversify across industries. They avoid emotional decisions. They understand that markets move in cycles and that patience is not a personality trait, but a financial weapon. Instead of chasing the next big thing, they build portfolios designed to survive bad years, because bad years are guaranteed. Crashes are guaranteed. Fear is guaranteed. The only variable is your reaction. Diversification exists to protect you from yourself. When you invest in different companies, sectors, and strategies, you reduce the emotional impact of any single loss. You stop obsessing over individual outcomes and start thinking in systems. Tracking progress is not about checking prices every day. It's about checking behavior. Are you still investing consistently? Are your goals the same? Are fees eating too much of your returns? Has your risk tolerance changed? Has your life changed? Most people think investing is about predicting the future. It's not. It's about controlling yourself long enough for the future to work in your favor. And that's the hardest part. Because the market doesn't test your intelligence. It tests your patience. It tests your emotional stability.
It tests your ability to stay calm when everyone else is panicking. In the end, investing is not a financial skill, it's a behavioral one. And the people who succeed are not the ones who know the most, they're the ones who quit the least. If you've watched this entire video, here's what that tells me. You're not looking for hype, you're looking for understanding. Most people want stock tips, very few want discipline. Most people want fast gains, very few want long-term control. And that's why most people stay average investors. If this video changed the way you see investing, even a little, then you're already ahead of the crowd. But information without action changes nothing. So here's your next step. Don't try to master everything. Don't try to time the market. Start by mastering your behavior. Open the account, define the goal. Choose the strategy that matches your psychology, and commit. Because the market doesn't reward excitement, it rewards consistency. If you want more content that breaks down investing in a simple, human, psychological way, not just charts and noise, subscribe to Money Behavior. This channel isn't about getting rich fast. It's about thinking clearly when others panic. It's about building wealth without losing your peace. And if you're serious about that, comment below. Are you starting from zero, or have you already begun investing? I read the comments, and the next videos are built for people who actually want to improve. The difference between people who build wealth and those who don't isn't intelligence. It's who stays. If you're staying, welcome. I'll see you in the next one.